Private credit has stepped into the spotlight this year and is gaining traction with investors. As traditional lending tightens and investors seek income in a higher for longer rate environment, private credit has emerged as a leading alternative. What used to be an exclusive space for institutions and ultra-wealthy investors is now at the center of conversations about diversification and yield. So today, we're going to talk about why private credit is trending and how you can access it through publicly traded vehicles like the VanEck BDC Income ETF, ticker BIZD, and the VanEck Alternative Asset Management ETF, ticker GPZ. Private credit has been one of the fastest growing asset classes over the past decade, and the tailwinds haven't slowed. Higher interest rates have increased the appeal of floating rate private loans, and at the same time, banks have pulled back from lending due to stricter regulations and capital requirements. That's created a lending gap, one that private credit managers have stepped in to fill. Investors are taking notice, and for good reason. Private credit offers attractive income potential, lower correlation to traditional bonds, and built-in inflation protection through floating coupons. It's become a powerful tool in portfolio construction, especially for those looking to add diversification and new sources of income. But here's the challenge. Accessing private credit hasn't always been easy. Historically, it's required long lockups, high minimums, and has had limited transparency. That's where business development companies, or BDCs, come in. These are publicly traded companies that provide direct loans to small and mid-sized private companies. BDCs generate income on the interest payments from these loan portfolios and then pass that high income along to shareholders of the BDC. The VanEck BDC Income ETF, BIZD, provides diversified access to this space by tracking the most liquid names in the public BDC universe. It takes the guesswork out of picking individual BDCs and gives investors efficient, flexible exposure to the private credit market. Now, another way to tap into the private credit boom and the broader growth in private markets generally is by investing in the firms behind the trend, the alternative asset managers that are building and scaling these private market platforms. Think Blackstone, KKR, and Ares Management. These companies have been growing rapidly thanks to demand for private capital across credit, equity, infrastructure, and real estate. The VanEck Alternative Asset Management ETF, GPZ, offers exposure to these market leaders and their diversified revenue streams. It's another lens on the private markets, not just participating in the income they generate, but investing in the businesses driving their expansion. So whether you're looking for income, diversification, or just a simpler way to access private markets, there are now more tools available than ever before. The VanEck BDC Income ETF, BIZD, offers efficient and diversified access to private credit through the BDC market. The VanEck Alternative Asset Management ETF, GPZ, lets you invest in the firms powering the growth behind the scenes. And together, they offer a public market gateway to a space that was once out of reach for many investors. For more insights into private credit, BDCs, and alternative asset managers, visit vaneck.com and explore our latest research and ETF offerings. If you found this video helpful, like, subscribe, and stay tuned for future updates on the evolving world of investing.